Welcome. Today's topic will be California Small Group Health Insurance. My name is Betty Lindstrom. I'll be your presenter today. I've been in the insurance business since 1975 and established my agency in 1995. You can read about us on Yelp and LinkedIn, and here's our website. Today we're going to cover the following topics. What is a small group? What are the advantages of group coverage versus individual health plans? What are the available plans and benefits? We'll talk about options for your employees and cost sharing, the tax advantages, and how to get started. First, what is a small group? A small group is an employer group with 2 to 50 employees that are eligible for coverage. These employees have to have worked for you for more than half of the preceding calendar quarter. Owners and W-2 employees are included in the count, but your 1099 compensated folks will not be. You can set eligibility to those working at least 30 hours weekly or 20 hours a week, and one of our carriers will go down as low as 15 hours weekly. There will be documentation required to show the hours worked for each employee and that you have an ownership interest in the company if you're not on payroll. The advantages of group insurance over individual are many. First, and probably the most important, group insurance is guaranteed issue. That means all of your eligible employees and their dependents can be covered regardless of their health conditions. You can add dental, vision, and disability benefits. Those may be less expensive on a group basis than on an individual basis, and some have much stronger benefits than individual plans. Your policy will renew annually, so you'll have a fixed renewal date for budgeting purposes. That gives you more stability than in the individual plans. Those can be adjusted more than once per year. You'll have an open enrollment period every year, so employees can add dependents, change plans, etc., and you have more benefit options than with individual plans. You can offer medical under an HMO, a PPO, or an HSA qualified plan, dental plans on an HMO basis, PPO, or indemnity basis, vision plans, life and accidental death and dismemberment, disability, and retirement plans. First, HMO medical plans offer the lowest out-of-pocket expenses for covered employees. There are rules for these plans, however. First, you have to select a primary care physician, and that doctor will direct all of your care, refer you to specialists within your one medical group. The doctors in the medical group will find it very easy to share information from your medical file, and that can be helpful. You'll have the least out of your pocket because preventive care on the federal guidelines list will be covered with no cost to the member. That list includes PAPs and mammograms for the ladies, guys, your turn your head and cough exam, immunizations, well child and well baby coverage, colonoscopies for those over age 50, etc. Office visits on an HMO will typically have only a copay assigned, and your lower copay will be for your primary care physician, in some cases a higher copayment for a specialist. Prescription drugs are covered with a copay for generic and brand name medications. However, you may see a separate brand name drug deductible for your brand name prescriptions. Other expenses such as hospitalization, surgery, MRIs, x-rays, labs may be covered with just a copayment, or you could see co-insurance where the insurance company pays 80%, you pay 20%, or they pay 70%, you pay 30%, until you reach your out-of-pocket maximum. Then you'll have 100% coverage for the balance of the calendar year. PPO plans. These have the most flexibility. There's no requirement to select a primary physician. You will be able to use doctors in or out of the network, but you'll have best benefits if you use the network providers. You can self-refer to your specialists, and you can go across multiple medical groups. You will, however, have higher out-of-pocket expenses. You'll see deductibles and co-insurance in addition to the co-payments. With a PPO plan, same 4 categories of benefits apply. You'll have the preventive care we discussed earlier. As long as you're in the network, there will be no cost. Office visits typically are covered with just a co-payment and no deductible. Prescription drugs, as we described under the HMO. Hospital, surgery, MRIs, all of those other services, you'll pay a deductible first, and that can be either $250, $500, all the way up to $5,000 per year per person. Most of the time there is a family maximum on the deductible. You'll see co-insurance on those services. The plan may pay 70% and you 30%, 80-20, 60-40, etc., up to an out-of-pocket maximum, and then you'll have 100% coverage for the balance of the calendar year. Plans that are qualified for health savings accounts may be an HMO or a PPO format, but usually we see PPOs. Preventive benefits will be paid without a deductible, and it will qualify the member to open a health savings account. All of your other benefits will be subject to a large deductible. So if you start with a $3,000 deductible for an individual, the plan may double that to $6,000 for a family or a couple. Under the HSA, as we said, your preventive benefits will be paid without a deductible and no coinsurance. Everything else you do will be subject to a high deductible. Coinsurance, once you reach your out-of-pocket maximum, you have 100% coverage. Some of these plans do give you co-payments for prescriptions, but they are paid after the main deductible is met, and the cost of the prescriptions will accrue toward the deductible. Other options and cost sharing. The employer might want to pay the entire premium for a health plan for the employee or the dependent or both. You have options, though, to offer an employee a choice of plans and fix an employer contribution, having the employees pay the difference of the premium for the plans they've selected. Employer options include a flat dollar amount for each employee, a percentage of the premium for a specific plan, or a percentage of whatever plan premium the employee selects. There are tax advantages to offering group insurance. Employer contributions are tax deductible to the employer. Some may qualify for an additional 35% tax credit as part of the healthcare reform law. Employee contributions may be taken from their paychecks on a pre-tax basis through a Section 125 plan or premium-only plan. These Section 125 plans will save the employees on the federal and state tax withholding plus their Social Security and Medicare taxes on the amount of the premium, and saves the employers on all the matching and payroll taxes. So your FICA tax, FUTA, SUI, ETT, etc. And they will also lower your covered payroll for calculating workers' compensation premiums in California. How do we get started? The steps to implement your plan first will be to determine who's eligible. How many hours a week should they work? How long will they need to work for you before they're eligible? Plans can start the first of the month following a date of hire, or you may choose to have employees wait 1 month, 2 months, 3 months, etc. before they become eligible. What is the purpose for your plan? Are you implementing this plan to attract quality new employees? Perhaps your industry is very competitive that way. You may want to be just keeping your existing employees motivated and happy. Sometimes employers implement a plan just because the employer has been turned down for individual health insurance and they want to take advantage of the guaranteed issue. The next step will be to establish your budget, decide which benefits you'd like to offer, and get quotes. We have a link here that you can click to go to our fillable census form. This will help you develop your list of the employee names, ages, home zip codes, gender, dependent status, and you'll want to work with us to determine your best company and plans that would be good for your employees, what's the best to offer. We'll schedule an employee meeting to announce the plans, explain the benefits and the contributions, help folks make their decisions. If we're doing an in-person meeting, we typically bring refreshments and make it as fun as possible. We help with your applications, both the enrollment forms and the company documentation. We'll follow up with underwriting and make sure your group gets approved. We'll assist with you setting up your payroll deductions. There will be summaries of benefits and coverage, SBCs, to be distributed, and we'll want to work with you to make sure any other required notices are given. If you're ready to get started, give us a call or click the link shown on your screen, and we'll be happy to work with you.